Hello traders, welcome to Investoo.com's how-to series and this module called oscillators, in which we'll be reviewing all the oscillators you can find on the MT4 platform. And on this lesson we're going to go through the RSI, which stands for Relative Strength Index. The RSI, or Relative Strength Index, is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 and 100 and is considered oversold under 20 and overbought above 80. Now, you can see that when the conditions of this oscillator are overbought, just as in this case, price tends to reach a level that is unsustainable and is due for a correction. Just like in this example, you can see that the oscillator gives us above 80 readings, and in this case we went all the way up to the mid 87 readings, and then we started to go down on a reversal. Now you can see that the oscillator also shows you very good setups called divergence. When the oscillator makes a first high, price will also make a first high. But then you have to look at the second high. And if the second high on the oscillator is lower than the second high of price, this means that there is a divergence between the oscillator and price. And in this case, this divergence is called bearish divergence, meaning that not only we know that the oscillator is overbought, but we know that we have a bearish divergence and that a true reversal might be in play when we break these lows. The same thing is also true for a bullish divergence when the oscillator makes higher lows and price makes lower lows. Now, you can also see that the oscillator also gives us signs of corrections when we are in a very strong downtrend. You can see right here that the Euro US dollar 1 hour chart was in a 430 pip down move from this high until this low, and you can see right here that we have a period of correction, meaning that the sellers were pushing price down, but then because of profit taking, price was moving up, and you can watch this also on the oscillator. Now, for all of you who like to trade with the trend, what you want to do is look for the direction of the move, and then look for these spots where price corrects to the opposite side. Then go to your indicator or your oscillator, or in this case the RSI, and look for the RSI moving above the 50 level. When the RSI moves above the 50 level and then crosses back down, this means that we are in a corrective move and price is continuing its, well, in this case, down movement. This is another way to use the RSI. Okay, now the RSI is also very good at reversals, and in this case you want to look for the RSI abruptly crossing the 50 level to the upside. It doesn't have to reach the 80 level, but it does have to continue to trade or to oscillate above the 50 level. This is called the bull territory, and below the 50 level is called the bear territory. When the RSI crosses abruptly with the 50 level, you can see that on the price action, the trend has shifted to the upside. At least the immediate trend has shifted to the upside. And you can see the corrective moves on the RSI also when it dips below the 50 level to the bearish territory, but then crosses back up. And this is how you use the RSI when you are trading Forex. And if you want to learn more about the RSI, just go to our Advanced Technical Analysis course at Investoo.com/advanced technical analysis.